What's up, traders? It's Robson Hayashida here, and today we're going to talk about the last breath of the move on Pvsra. So this is an advanced level class. If you are a total beginner, please stop watching now. Go back to my past videos and learn how to trade Pvsra first. Learn the basics first and come back to this video. Alright, so let's get started. So first of all, the reason why I picked this pair is the USD CAD, is the dollar CAD pair, as you can see here. And the reason I picked is when I picked this pair, Canadian dollar was not here. It was a little bit upper, okay? And the US dollar was here, the second on the bottom of the list. Okay, so I calculated that the distance between these two currencies was big enough. So uh, usually I like to pick the ones that has the greatest distance between each other. Okay, so I saw that the distance was great. Okay, so I picked this pair, and after that I started to look for clues to see the trend of the move. So what I did was I switched it back to M15 and tried to understand what's going on. Then switch it back to M5. Okay, and on M5, I spotted this. I spotted that PA went all the way, breaking this key level. The key level here is this one, okay? This one. So it's the 1.30000, okay? As you can see here, all right? So it's the 1.3, oops, 1.30000, okay? So PA broke it. But what happened is that after it broke it, you ha you have a green candle here, a huge green candle with notable volume. Okay, this green candle failed to break it again. Okay, so you broke it here, and here you didn't have notable volume, right? But here you had notable volume and you failed to break it. And what happened next? After this, you had another one. So you had a lower top here, okay, a lower top with notable volume that failed to break the key level. And here you got another lower top with huge volume. So look at the volume here. The volume here is huge. And this lower top is lower than this top. So we say it's a lower top, right? Because it's this top is lower than the previous top, and it also failed to break the dragon. Okay, so you have a lower top with notable volume that failed to break the dragon. Okay, indicating to me that the trend here was bearish. Okay, and when we were around this area, what I saw is that there was a big chance for us to hit the 200 EMA. Okay, so we okay, at this time this still didn't happen. Okay, so we were around this area here. So I was like, we have a chance to hit the 200 EMA. And usually I would think, okay, we're going to hit the key level, and then after hitting the key level, I don't know where to go. But in this case, I didn't. Why? Because we already hit the key level here, and we hit the key level once again here and bounce back. Okay, so I thought, okay, so we are going to hit the key level again, and probably we can even hit the 200 EMA. We can hit the 200 EMA, and what happens next, I don't really care. I don't care if it goes down, if it goes up. Why? Because my intention here was as soon as we hit the 200 EMA, I would close this trade. Okay, so what did I do next? Next, I went to, so once I know, okay, once I know the trend, so now here the trend for me was clearly, it was clearly a bearish trend, okay? So once I know the trend, I switch back to M1, okay? So switch back to M1, and look for an entry opportunity. Okay, look for an entry opportunity. So what I saw in M1 is that I had another series of notable of lower tops actually. So you have top here, okay? After that, you have two lower tops. So you have this red candle that failed to break the 200 MA and also failed to break the dragon. Then you have this green candle here, also failed to break the dragon and the 200 MA. And both of them have notable volume, as you can see here, right? So you have these lower tops on M1 as well, all right? And you can see here it broke the 200 MA, although it was this is the shadow, right? So the shadow of the candlestick broke the 200 MA, but then it finished above it. And here it broke it for a while, but finished above it. Okay, so I know that there are in the past two attempts to break the 200 MA. And finally here it broke it, but there was not notable volume. Okay, so I have this idea that my trend is bearish, okay, on M1 as well. So I was looking for an opportunity to enter, and then the opportunity came here. Why? Because here, can you see this red candle here? So I have a red candle that failed to break this key level, the 1.29750, okay? 1.29750. So I have this red candle, failed to break the key level, okay? And then I got another consecutive candle with huge volume as well as you can see here that also is a green one, but this green one also failed to break the key level. So I got two consecutive candles with huge volume that both of them failed to break the key level. So let me show it to you guys on Notepad. So this is what I have. I have two consecutive candles, one red and one green. And actually the color, if it's red or green, doesn't really matter. It can be two reds or two greens, okay? It doesn't really matter. But what matters here is that both of them have, okay, notable volume. And the candles were big with notable volume. And both of them failed to break the key level. Okay, so this is very important. So you have both of them with notable volume and failed to break the key level. So this for me was the entry decision. So I made my decision, and after this happened, I entered here. So I made my decision to enter. I placed my trade. Of course, it's a short. Okay, so once I identified the overall trend was bearish, so I was looking for an entry opportunity to short it. And I sold my currency pair here. So I sold my pair here, targeted 5 pips, and this is very important. When you target 5 pips, of course, you have to calculate that you have enough space for 5 pips. So your 5 pips have to finish before, okay, before or when you touch your 200 EMA. Why? Because once you touch the 200 EMA, it could bounce back as it did, as in fact it did here, right? It bounced back actually. So yeah, so this is exactly what I'm talking about. Once you hit the 200 MA, there is a huge chance that it's going to bounce back. So you have, when you enter the trade here, you have to calculate this distance, and this distance has to be 5 pips. If not, you close before 5 pips. So let's say that this distance when you calculate it is like 4 pips, okay? Then you target 4 pips here, okay? So when I open my trade here, I switch it back to M5 and I calculated the distance and I saw there was enough space for me to target 5 pips, okay? So I target 5 pips here, and as you can see here, I could have targeted even more. I could go for 1. I could actually have gone to 5.1, 5.2, right? It doesn't it doesn't really matter. because I got my 5 pips here, and it's better to play safe. Okay, and this happened. Well, now it's everything is past, so I can tell you guys that it went even further down, right? But at that moment, I couldn't predict this. So I calculate this, close my trade here, and I as soon as I close it, you can see they went a little bit further down, but then they bounced back to the 25 WGT, right? 25 WGT, this light blue line. So it bounced back up, okay? So this is exactly what I'm talking about. And this is the lesson for today. Once again, it's called the last breath of the move, okay? Because once it touches your target, you don't really know where it's going anymore. And this is the message from me today. We still have one trading day tomorrow. It's Friday tomorrow. And I wish you guys all the luck. Stay green, my friends. And bye bye.